In this presentation, we will continue on with part 15 of our partnership comprehensive problem, taking a look at a Schedule K type of adjustment related to contributions. Here we are on our form 1065. We're going to scroll down to the page 5 where we see our Schedule L. We want to just check that we're in balance before we make our adjustment. Here we are. We look good. Everything looks like it is in balance. We're then going to go to our Excel worksheet. We're focusing down here on the cash contributions. So we put the cash contributions in. We noted that we're going to have to go back and make an adjustment related to them. Now we are doing so. So here's our contributions. It's going to be a Schedule K type of adjustment. Let's first take a look at that adjustment in the tax return. So we note we're first in balance. We're going to then go to page 4, which is going to be where our Schedule K adjustments are. We're looking for the contributions down here in the deductions line. We're in the contributions, which is 13A. I'm going to right click on it and jump to that form. We're going to go to the 50% contributions. These will be charitable contributions that are going to flow through to the individual partners' schedule, or K1s to their individual tax returns, or 1040. So we've got the limitation, the 60% limitation, and we know that the dollar amount was for 5,000. 5,000. Okay, so then we're going to go back to the forms. Let's see what happens. It appears here at the 5,000. Let's see if it throws us out of balance like we would expect it to do. We're going to go back over and we see that we are now out of balance. So we're out of balance here. The other side, we had recorded into income to make it balance. We knew that we were going to have to go back in there. So therefore, we're going to go to the income statement, our data input on the income statement for deductions. And down here, all the way down in other deductions, down at the bottom, we put the contributions in other deductions. So I'm going to open this back up. There's our contributions. Now I'm going to go down below and make it a Schedule K adjustment too, again, so that we can see it. This will be something that can be seen on the tax return. So once you're done reviewing it, you may want to delete both of them so that you don't have that much detail. But we're going to show this. That way we can see the full journal entry in essence. We're going to then say, okay, then I'm going to go back up to the forms, back to the forms. Does that put us back in balance? It does. So we're back in balance here. Now we want to go to our income forms and see if we can tie out our net income amounts. So we're going to do a journal entry back over here on our Excel worksheet to try to tie this out. And we will tie it out. I'm pretty confident. I'm going to make a note here. We're going to make the note. And this is for or let's just say contributions, Schedule K adjustment. And I'm going to say, all right. And then this is a debit balance. We need to make it go to 0. So we're going to credit that. I'm going to put it on the bottom. So we're going to credit this. The other side will be up above. And that's going to be going to this blue item, the Schedule K adjustment. That's going to be for the amount of 5,000. That'll be both the debit and, of course, the credit. Let's go ahead and post this out. I'll post the credit first because it's up top. So here it is. That's the first account, I should say, on the trial balance. So I'm going to post the credit, which will bring it down to 0. The other side then, I'm going to go down to the contributions in Q42. Q42 equals, and we're going to be posting the debit, and that's going to bring it up to 5,000. Let's check, that'll put us back in balance down below. Now let's check our income numbers down below here. And this is totaling up everything below the sales. This is totaling up everything below the sales, but not including the Schedule K and M1 adjustments. All right, back to our tax form. Page 1, back down to the bottom, we're at the 289,250. So 289,250. Does that tie out here? We have the 289,250. It looks good. Then I'm going to go back to the page 4. Within page 4, we now have, if I was to calculate this out, we've got the 289,250 plus the 1500 plus the 750 plus the 1350 minus the 5,000. Minus the 5,000. That's the 287,850. So if I go back over to our forms here, we're at the 287,850, which is basically this number, and then those K1 Schedule K adjustments. And then if I go to our tax return to page 5, we're going to say that we start with the book value of the 355,278. That's going to be our book value here, 255 or 355, 278. And then we're going to end off with the 287, 850. If we go back over here, there's the 287, 850, which we could do in our two-step method, taking it from the book value to the first page of the tax return and then the K1 adjustments, or our other calculation, which matches out the M1 more exactly, beginning balance, then our adjustments to the ending balance, this number matching that number, both of them matching the final number on the M1.